talking this morning about short sales involving credit unions in second position.
Yeah, private lenders, anything besides the standard big banks or FDIC insured institutions.
Right. As those type of short sales can pose some challenges.
Yeah, well, let's first look at credit unions. Number one, to have an account at a credit union, it's like a club. It's like a membership.
You get a little card and everything.
Yeah, and it's almost like what was that show that Ron Howard was on as a kid?
Happy Days.
Now before that, it's like everyone knows it. It's like Cheers. Everyone knows each other. You go to a credit union, and it's really old school banking.
Very friendly.
Yeah, I remember growing up and going to the bank with my grandmother, and everyone knew my grandmother, and she'd go with roll coins and whatnot, but everyone knew Helen.
Yeah.
And everyone was like friendly. Well, of course the bank was friendly. They were taking your money and making money off your money, and then lending you money back and making money off that. Anyway, so the bottom line is this: is that what a lot of homeowners don't understand, a lot of agents don't understand, is that credit unions and private lending institutions do not have to participate in short sale. Matter of fact, nobody has to participate in short sale.
No, I mean, even with all the government programs out there, participation is voluntary.
Right.
Although, with the major lenders that got all of their bailout money and all of the rest of it and were kept afloat by the taxpayers, it's strongly encouraged that they participate, and they've all quote-unquote embraced it.
Yeah. Well, they had to. That's a whole other topic.
They basically had to. But credit unions and, as you said, private lenders, they didn't. And the participation in these programs, such as HAFA and many of the others, is still voluntary.
That's right.
So what we're finding in many instances is that the credit unions, in certain cases, they can be a little bit arrogant about it, what I found in negotiating with them.
Really arrogant.
You go back and they're like, well, we don't have to do that. We're not going to participate in that. Those rules don't apply to us.
That's right. I've heard that phrase before.
And it's a real different situation. So if you have a short sale in which you're dealing with a credit union in second position, all of the normal rules that we've been teaching you and the procedures that we've been teaching you, you still follow all of that. However, just know that the outcome may not be the same as if you're dealing with Citi or Chase or Bank of America in second position.
Yeah, and I'm finding that a lot of these private lenders and especially the credit unions are asking for a huge amount of money to do like 25% of what's owed.
Right.
And we know that if the seller's going to bring 25% to the table, if that loan is in second position, we have to tell the first.
Right.
Hey, FYI, Bob over here is bringing 25 grand to the table to pay off the second, and you're not getting any of this.
Exactly.
Well, what's the first going to do? They're going to freak out.
Exactly.
Yeah.
We want that money. We're the one that are in first position. We're the one that are owed the lion's share on this. We want that money. So now you can end up in a stalemate, so to speak.
What do you do as agents or as homeowners? What are you doing right now if you're in that type of position? What are you doing to try to get your short sale approved? We'd like to know.
Yeah, absolutely. I mean, we've got our own ideas and different things, and every case is uniquely different. But if you have had a dealing with a credit union or a private lender in second position, and you've successfully negotiated that short sale, what terms did you get? We'd love to get that feedback, because in many cases, like you just said, the credit unions are demanding a lot of money, in many cases 25% or more of the outstanding balance, which can obviously cause a huge problem with the first, and the first has to sign off on that.
Yeah.
The other aspect is, here in California, we have that new law in place that says if a lender agrees to a short sale, they cannot pursue a deficiency judgment, no matter if they're first position, second position,
third, fourth, fifth, whatever.
Exactly. So the credit unions, again, are very hesitant. If they're trying to agree with this, they're taking all of that potential for claiming down the road out of it. The most best line I heard is, well, even if we agree to the short sale, that law doesn't apply to us.
Right.
There comes the arrogance again. And it's like, you know what? Because I drive a Porsche, the speed limit doesn't apply to me either.
Is that true?
I know I don't drive a Porsche.
I need to go look at a Porsche then.
Yeah, and the speed limit does apply to me.
And then I'm going to have to sell my home as a short sale to make that Porsche. That's a whole other topic.
Go there.
Well, let us know. Give us your feedback.
Absolutely.
We know what's working for us, but we're going to try something new on some of these videos. We want your feedback to see what you're doing.
Exactly.
If you have any questions, any concerns, criticisms, you don't like something, or you'd like us to talk about something, what do we do, man?
www.s2neg.com.